Today on Fear and Greed, bad news for anyone heading overseas with the Aussie dollar hitting an 8-month low. Macquarie boss Shemara Wikramanayake tops the list of highest paid Australian company CEOs, making close to $30 million. And the world's most visited church, Notre-Dame Cathedral in Paris, reopens. Plus, Prime Minister Anthony Albanese declares the attack on a Melbourne synagogue terrorism, and how investors are trying to take advantage of the anti-woke movement. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 9th of December, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
There's so much to cover in that intro, I nearly forgot the name of the podcast.
That's right. Wow, that's the longest intro ever.
Oh my gosh, we got through it and then got to Fear and Greed and I stumbled. There we go. The main story this morning, Sean, the Aussie dollar has tumbled to under 64 US cents, which is an 8-month low, as economists say the Reserve Bank this week could indicate that it is thinking about cutting rates.
Not a great time to travel overseas, Michael, especially if you're heading to the US. The Aussie dollar fell under 64 US cents over the weekend. Hasn't been down there since May this year. And really, it hasn't been at this level for a long, long time on a sustained basis. It's under pressure against other currencies as well. It's buying 60 euros, 50 pence. It's trading around these 8-month lows across many of the currencies. A few reasons why the dollar is as weak as it is at the moment. Demand for Aussie dollars just isn't very strong. Much of the demand comes from countries or companies buying commodities, but with iron ore prices relatively low, Chinese demand down, then the demand for the Aussie dollar just isn't there. The weak economic growth figure for the September quarter released last week also has put pressure on the currency as well. These figures suggest the Reserve Bank might need to cut rates before the middle of next year. That pushes the Aussie down. A bunch of experts now reckon it could go further, particularly if Donald Trump imposes tariffs on imports. Commonwealth Bank, for example, thinks the Aussie dollar will head towards 60 US cents next year, by about September next year. Bad news if you're going overseas. However, actually very good news for local exporters and the economy more generally, because it makes Australian goods cheaper overseas.
Sean, you mentioned the Reserve Bank. The board of the RBA meets today and tomorrow, but no good news on rates really expected.
Not yet. The benchmark will stay at 4.35%, 12-year high, but the Reserve Bank and the board might just soften their language around it. Certainly bond investors think that is going to happen. They now expect a rate cut by April next year. The Reserve Bank is faced with the dilemma of a slowing economy. It grew by just 0.8% in the 12 months to the end of September. That's the worst since the 1990s recession outside the pandemic. But inflation remains too high, with underlying price rises at 3.5%. Very tricky path the Reserve Bank needs to follow. What's the appropriate?
Something that they're trying to balance on. Yeah, it feels like there is a perfect phrase right there, and it is escaping both of us right now, isn't it?
Yeah, I mean, treading a fine line, balancing the scales. I don't know. One of those things.
But look, I mean, you look at the fact that there is, as you say, sticky inflation. There is a slowing economy, which all sounds like bad news, but it doesn't seem to be affecting equity markets that much.
No, that's actually pretty true. The Trump enthusiasm remains. Lower rates eventually will help earnings. Of course, the equity market trades on what people think earnings will be in 6 to 12 months' time. So people are pretty confident. The S&P ASX 200 closed down on Friday to 8,421 points. Means the benchmark was down a bit last week, but it's up 11% for the year. That is a pretty good effort. Futures trading suggests the market could open higher today. That's after Wall Street set yet another record high over the weekend, 57th for the year. Tech stocks led the way there. The big economic news was that the US economy added 227,000 jobs last month. Now, if you look at the trend, it basically shows the US labour market slowing. That adds to the argument that the US Federal Reserve will cut rates further. And Bitcoin's worth a mention, pushed back above $100,000 a unit over the weekend.
Got a great interview coming up after the show for investors today, Sean. It's with Matt Wacher, who is the Chief Investment Officer, Asia Pacific at Morningstar.
It is a great chat. We talked to him about opportunities in different countries. Now, Matt isn't saying don't invest in Australia, but he's just saying there are opportunities outside Australia that are worth having a look at. China, we talk about. Korea, Europe, Latin America, places that we don't really cover that much on Fear and Greed. So it's fantastic talking about what he likes about some of those countries and in some cases, the companies within those countries.
Yeah, it's a really good conversation. As I said, a must listen for investors. We still have a fair bit to cover before we get there, Sean. We're talking spring selling season for property, some good news for Woolies shoppers, Starbucks under fire for being too woke. There is so much to get through. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese yesterday said the arson attack at a Melbourne synagogue late last week was an act of terrorism, but it is up to police to make the formal designation.
If they do designate it terrorism, they can access additional federal government resources. Yesterday, the Prime Minister committed $32.5 million to Jewish community safety funding. Just a reminder of what happened at 4 a.m. Friday morning, an accelerant was used to set the Adass Israel synagogue ablaze in Melbourne. Yesterday, the Victorian Premier Jacinta Allen didn't actually call it terrorism, preferring to not risk the police investigation. Opposition leader Peter Dutton labelled the attack a national disgrace and an act of terrorism. Now, Israeli Prime Minister Benjamin Netanyahu directly blamed the extreme anti-Israeli position of the Albanese government for the Melbourne attack. And he said in a post on social media that the Victorian government and police need to lift their game.
Sean, the just completed spring selling season was less successful than a year ago, with overall sales volumes down. And there's also been a rise in the time taken to sell a home.
Across the country, there was a big disparity. Sydney volumes were down 15% compared to the 5-year average. Adelaide was up 16%. Across the country, volumes were down 4%. The overall clearance rate was lower this spring selling season. So the final weighted clearance rate, which is different to the preliminary clearance rate that we talk about most weeks. So the final weighted clearance rate for the last 4 weeks was 57.3%. Last year it was 62.7%. That's a big drop, according to CoreLogic. Bottom line, the winners were the buyers, not the sellers. Other notables during the spring selling season, the more affordable end of the market saw the highest price growth, while the upper price bracket, and we're talking places in Sydney and Melbourne here, went backwards. That was more or less confirmed, I think, over the weekend. We had auction results. Now we're talking about the preliminary clearance rate. Down 1 percentage point, lowest of the year. Melbourne actually doing okay, 67%. Sydney, easily the worst of the year at 58%.
I mentioned before, Sean, that there's a bit of good news for Woolies and for Woolies shoppers. The dispute that saw shelves left unstocked is over after the retailer struck a deal with the United Workers Union.
1,500 workers voted to return to work. The United Workers Union said Woolies had agreed to above-inflation pay rises and concessions about the operation of its employee performance management framework. That seemed to be the main sticking point. The 3 distribution centres in Victoria, 1 in New South Wales, should all reopen within the next day or so. So shelves should be stocked again at Woolies and also Hurt Endeavour Group, which includes Dan Murphy's and BWS.
Especially at Christmas, isn't it? It's a shocking time, isn't it?
Dreadful time.
I mentioned this one at the top of the show. These figures are staggering, Sean. Macquarie Group Chief Executive Shemara Wikramanayake has once again topped Australia's highest paid CEOs with a reported $29.4 million pay packet this year, taking her total pay to almost $300 million during the, 6 or so years that she's been leading the investment bank?
Yeah. Incredible, isn't it?
Wow. It's not bad.
She's just one of 4 women on the list of the 50 highest paid CEOs compiled by the Australian Financial Review. Along her are Woodside Energy CEO Meg O'Neill. She ranked 20th at $7.45 million. Xero CEO Sukhinder Singh Cassidy. She was 34th at $6.73 million. And Telstra CEO Vicky Brady, 45th, $5.64 million. After Wikramanayake, the next 3 highest paid CEOs are at ASX listed but North American based companies. So they're remunerated in US or Canadian dollars. So certainly their remuneration looks very strong when it is transferred into Aussie dollars. They're the bosses of James Hardie, ResMed and Newmont. At number 5 is Goodman Group's Greg Goodman. He earned nearly $15 million. He's forever at the top of those rankings. The departing chief executive of jewellery chain Lovisa, a guy called Victor Herrero, ranked sixth, almost $14 million in reported pay, but he actually received $41 million in realised or take-home pay after the market value of his shares and options have vested. A little bit in that. Basically, a lot of these CEOs, they earn whatever they get every fortnight, and then they earn incentives. Sometimes they are paid at the end of the year. Other times they might take 2 or 3 or 4 or 5 years to pay. And in the Lovisa guy's case, that's what happened.
Lovisa is such an interesting story, isn't it? Because that is such a staggering amount of money, considering that the price point for the jewellery that is sold at Lovisa is very, very, very low. Like we're talking kind of $5 or less than $10 for so much of it. It's like costume jewellery.
Yeah, and the company itself isn't actually worth a huge amount of money compared to a Macquarie Bank or a Woodside or Telstra or some of those sorts of companies. So it is a huge pay packet for that fella.
Yeah, indeed. Now, Google's dominance in general search services in Australia continues despite regulatory and technological changes to search services and legal pressure by other governments.
The Australian Competition and Consumer Commission's latest digital platform services inquiry report puts Google search market share at nearly 94%. Its nearest rival, Bing, has just 5% of the Australian market. What I would say, Michael, I'm surprised it's only 94%. I only ever use Google. I don't even think about Bing.
No, if I ever get taken to Bing by default, I just quickly navigate away from that.
Google.
Head on over to Google. Yeah.
The competition watchdog says that Google continues to be the default search engine on the majority of browsers due to its commercial pre-installation and default arrangements with third parties and its ownership of the Chrome browser. It also notes that while the integration of generative AI into search is still evolving, Google's competitors are yet to gain meaningful market share from that company. The US Department of Justice last month called for a ban on deals for Google to be the default search engine on smartphones. It also wants a sale of Google's Chrome business in the EU. Mandatory choice screens have been introduced, as well as measures aiming to address self-preferencing. We're nowhere near that yet here in Australia, but clearly the ACCC is thinking about these sorts of things.
Sean, Wesfarmers has reshuffled management, putting Kmart's chief financial officer in charge of the discount chain and elevating the current CEO, Ian Bailey, to run the fast-growing Anko Global empire.
Alexandra Spaseska, at 41 years of age, will become Wesfarmers' youngest divisional boss and run Kmart. Mr. Bailey will take over the fast-growing Anko business. Anko, what an amazing success story. Established as Kmart's own brand in 2019, less than 5 years ago, now sells more than 1 billion items, from linen to fashion and toys. Last year, it signed with Canadian department store Hudson's Bay and also did a deal with Mattel's Fisher-Price brand to roll out wooden toys across 1,000 Walmart stores in the US. Anko now contributes about 85% of sales at Kmart. Is that phenomenal?
Remember some of the stats? We've talked about Anko a bit because it is staggering. The fact that I think it was 20% of all clothes sold in Australia now carry the Anko label, and that because the Anko toys as well are so cheap, and a lot of them are made with wood as well. So they're really kind of targeting a very good market there. That Anko is now the biggest selling toy brand in the country.
Phenomenal. It's a major reason why the discount retailer is now contributing more to the Wesfarmers business overall. Now, Wesfarmers includes a bunch of businesses, Bunnings, Officeworks, they've got industrial assets, but Anko has been the real success story over the past couple of years.
Yeah, amazing. Rare earths group Iluka's share price fell 9% on Friday, Sean, after a blowout in the cost of its new refinery in Western Australia.
Iluka and the federal government have agreed to share the cost of the blowouts, with the original cost of the $1.2 billion ballooning to $1.8 billion. The Albanese government has pledged a further $400 million towards the facility. It'll be the first rare earths refinery in the country. It's part of the government's plan to break China's dominance of processing of critical minerals. Iluka will stump up another $200 million plus to cover its share of the rising costs. The fall in Iluka's share price pushed it to a 4-year low on Friday. Rare earths are used to make things like industrial magnets used in cars, wind turbines, fighter jets, stuff like that.
Turning to international news, the Syrian government appears to have fallen in a stunning end to the 50-year rule of the Assad family after a lightning rebel offensive.
The head of a Syrian opposition war monitor said President Bashar Assad had left the country for an undisclosed location, fleeing ahead of insurgents who said they had entered Damascus after a quick advance across the country. Syrian Prime Minister Mohammed Ghazi Jalali said the government was ready to extend its hand to the opposition and hand over its functions to a transitional government, according to Associated Press. State television in Iran, Mr. Assad's main backer in the years of war in Syria, reported that the president had left the capital.
A new fund, I mentioned this one before, aiming to punish woke companies, will make Starbucks its first target as politically motivated investors move to capitalise on Donald Trump's election. You kind of knew this was going to happen, didn't you?
Oh, it's an amazing story. So the actively managed fund, which Zoria Partners expects to launch early next year, will keep out S&P 500 companies that incorporate diversity, equity, and inclusion considerations into their hiring processes. The fund unveiled its Starbucks plan late last week at Donald Trump's Mar-a-Lago resort in Florida, according to the Financial Times. Azoria's founder, James Fishback, said, and I quote, "Americans, whether they voted for President Trump or not, do not want to invest in companies running woke science experiments." End quote. Starbucks appears rattled. It denied it had targets or quotas at any stage of the hiring process. The chain said that policies cited by Azoria, which include reaching racial and ethnic diversity of at least 50% among corporate employees, were aspirations, not quotas, and that they recently expired and were not reinstated. The new fund is the latest attempt by Trump-supporting investors to push back against environmental, social, and governance initiatives by big US companies, and of course, to profit from the coming change in government in Washington.
Finally, Sean, the world's most visited church, the iconic Notre-Dame Cathedral in Paris, has reopened to the public overnight, having been restored to almost exactly its form before a devastating 2019 fire. And the speed at which this is done, considering I went back and I was watching some videos of that fire. Sean, when we were talking about this story, it is huge. And in that initial kind of 24 hours, the coverage was all about President Emmanuel Macron has committed to rebuilding the cathedral within 5 years. And here we are 5 years later, done.
He's done it.
Yeah.
It's been one of history's more remarkable restorations of a Gothic masterpiece, even if the new parts of the cathedral means it just lost a touch of its old feeling, I suppose. In 2019, Notre Dame's spire crashed down in flames. The rebuild is faithful to the pre-fire Notre Dame, according to media reports, and it follows a huge united effort by the French. Within hours of the fire, luxury goods billionaire Francois Pinault and his family promised 100 million euros for the reconstruction. They were quickly followed by LVMH founder and industry rival Bernard Arnault, who offered 200 million euros. And then the Bettencourt Myers, the heirs behind the cosmetics giant L'Oreal, matched it. There was 500 million euros, just like that. In total, cash gifted to rebuild Notre Dame reached 846 million euros. In fact, it was actually more than the 700 million needed. So the extra funds were used for work on the undamaged exterior and cathedral's immediate surroundings, but an incredible effort by the French to get this done.
Yeah, quite remarkable. All right, Sean, up next is Fear and Greed the week ahead, featuring our resident economist, Stephen Koukoulas. Obviously a big week ahead for the economy with the Reserve Bank board meeting today and tomorrow. And after that, we've got the interview with Matt Wacher, Chief Investment Officer, Asia Pacific at Morningstar, a must-listen for investors. They are both coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 9th of December 2024. Make sure you're following the podcast, most important, and join us online as well on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.